Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. With me is Ekta Batra. And Ekta, it's looking like quite a good screen right now. We've seen a solid pickup, so we're pretty much at the high point of the day. For the Nifty, we're seeing a 70-point gain right now, so around 0.3% higher. The mid-cap index has been holding up well all through the morning. It has come off a bit right now, but it's still, around 260 points in the green. The real action today is coming through in the banking space, which is currently over 500 points in the green. So whichever way you look at it, this is looking like quite a good-looking screen, Ekta.
Hi Pavitra, absolutely no complaints which have really come in, and we have a lot of the financials which have picked up pace. We have a good advanced decline ratio which has held steady for most of the trading session as well. So 1,870 stocks advancing to around 1,000 stocks declining on the National Stock Exchange. This afternoon we have with us Rajat Bose, who's joining in to answer all of your technical queries, and we have Sharad Avasthi, who's head PCG research, who's joining in to answer all of your fundamental questions. Sharad as well as Rajat, welcome to the show. Let's get going in terms of the first question that we have. We have Vikas Gupta, who writes to us from Baroda. He holds 40 shares which he's bought of IUC, and he's bought it at around 70 odd rupees, and 30 shares of Union Bank which he's bought at around 75 rupees. He wants to know whether this is a good time to exit, or should he remain invested in both these counters? Just about marginally profitable in both these investments. So Sharad, over to you. On the fundamentals, what would you recommend?
IUC, I think I should continue to hold. I'm very bullish on the OMC space. I think oil prices are not expected to go anywhere higher in the near future or even in the distant future. And as they stabilize on a lower trajectory, it should be very positive for OMCs, particularly all the OMCs. IUC is in a better spot because the valuations are attractive. The capex they are doing in the first phase regarding the refinery capex, and in the second phase, I think over the next 2-3 years, as this refining thing plays out, gradually they will have the alternate assets or the hydrogen assets that they are investing in to start contributing to the profitability. Valuations are very comfortable. We are expecting earnings to settle somewhere around 15 rupees over the next 2-3 years, gradually every year roughly. And at 15 rupees, I think 9 times is easily possible that the stock trades at. So IOC for a target of 130. And the dividend yield should also be very decent considering the similar payout. It should be 7-8%. So I think it's a very decent stock to hold on to for targets of 130. What was the other stock?
Union Bank, is that the one?
So Union Bank, they have had their problems with respect to NPAs after the merger of all the 3 banks. But I think in terms of size, they have achieved a decent size. They've more or less doubled the branch network, doubled the total banking base. And I think going ahead also, they should continue to perform well, though the GNPA numbers does look alarming at 7.5%. But that has substantially come down, and the net NPAs are meager at around 1%. The bank is targeting to pull it down further over the next 1.5-2 years. The corporate loan book should do well, I think, over the long term, and the advances growth should not be a problem. I don't foresee any trouble with respect to NPAs again looming higher. So I think it's a decent bet at these valuations. If the stock does start trading at, say, somewhere around 0.91 times price to book, I think the fair value should be somewhere around 115, 120 on the stock.
Okay, got that. Sharad, let me also ask Rajat what his call is on both of these. Rajat, we have IOC and Union Bank. I don't know how long the viewer is willing to stay invested. They haven't specified, but you take us through the kind of targets that you have on these, and does it make sense to hold for now?
Yeah, good afternoon, Pavitra, Ekta, and also Sharad. Thank you for having me. What I would like to say here is that both the stocks they have moved up quite a bit, especially IOC is trying to rescale up to its I think 2018 high of around 100. It's very close to that, but then one thing the investor needs to keep it in mind, that unless after this correction, the correction doesn't look to be over because it is still below the 50-day moving average as we talk. It needs to take out both the 9-day and 20-day exponential moving averages. The 20-day is higher, that is at 93.30. Unless in this recovery that is happening in the market and IOC doesn't take out say 93 half, then I think the investor would do better to actually come out of the stock. Regarding Union Bank, I would say that's looking better. After 2 days of correction, Union Bank is moving up again. About an hour ago, these two stocks were trading almost at the same level, and now the Union Bank stock is 92 half. It is getting past yesterday's opening price, and chances are that the 2-day correction after that, Union Bank is continuing. So I would suggest that the person should continue to hold on. Here the 20-day moving average currently around say 90, 91. So below 87 if he gives a stop loss and continue to hold it.
Okay, all right. So that's on Union Bank as well as IUC. But let's move on. We have Mujib Qureshi who writes to us from Lucknow. He holds 100 shares of Minda Corp, which he's bought at around 290 odd rupees. He's a long-term investor and asks if the stock is overpriced and whether he can hold the stock for the long term. Well, since it is a long-term question, Sharad, over to you on this one. The stock has outperformed quite significantly. From its 52-week low itself, it's rallied around 70 odd %. So what would you recommend? Do you think that there is more to go when it comes to Minda Corp and it is a long-term portfolio bet?
Yeah, on a long-term basis, I think it is a good portfolio bet because there is one simple thing, if you understand, that we are saying that 25 to 30% of the conversion will happen into EVs. And if the company does sell 25-30% of their product to EVs, their component per vehicle on a two-wheeler, three-wheeler, particularly on a two-wheeler, roughly goes up by 4 or 5 times. So 25% could contribute, even if you consider that it would be largely replacing ICE vehicles with electric vehicles. Even then, there is a possibility that the turnover could double over the say, next 5 to 6 years. So that way, it's a very good story to hold on if you have that kind of time horizon. And it could be a very good proxy bet on the improving EV space penetration within two-wheelers, three-wheelers. They are also entering into passenger cars. How they plan that entry and how much they are able to penetrate that market is a key monitorable, I think. But in the short term, I think next year, this year around 11.5 rupee kind of earning. Next year, we are expecting something around 15 rupees. And the stock's already trading at what, around 25-26 times forward. With a 20-25% growth. So I don't think there's much scope in the immediate short term. But certainly if you are looking at holding for a 4 to 5 year horizon, there is a possibility that you could hold on and you could be looking to roughly get around 60-70% returns from current prices.
Okay, that is the call on Minda. Rajat, what do you think about this one? You know, I was looking at the 6-month chart, it's up around 60%. In the past 5 days also, it's seen around a 6% kind of move. So how is this one looking to you and how much of an upside do you think is still left here?
Two things here. That is, if you are a long-term investor, as Sharad said, in that case, there is no problem. You can continue to hold on. But if the horizon is short term, then he has already, he has purchased it at a pretty high level. 290 doesn't offer much of a cushion as such if there were to be any kind of selling. So that buy price should be the stop loss and he should continue that way.
Okay, all right. That's on Minda Corp. Well, let's get to another question now. Rupendra Goba writes to us from Chandigarh. He holds 20 stocks of Tata Chemicals, which he's bought at around 1,000 odd rupees. Long-term investor wants to know what to do with this particular counter. He's just about flat in terms of his buy price. So, Rajat, what would you recommend? Tata Chemicals has been more in focus on account of the cut of soda ash prices, around 17 odd % just in the past couple of months. And that the expectation is that it could weigh down on margins. But technically, do you think that there's any upside on this counter?
Technically, there could be upsides. There is some kind of a recovery that was going on, and up to until recently, I think it was early August when it posted a high around say 1,080 or so, and then it failed. and now again it is trying to move up, and while it failed, some technical features are very worth noting. That is, 200-day exponential moving average was tested, and that formed this swing low, and thereafter now it is trying to take out the 20-day moving average. I would say that Tata Chemicals should be held with the stop below 980, where the 200-day exponential moving average is located, and immediately I am looking at, say, 1080. It can even go beyond 1100. For a long-term investor, I would say that definitely hold it with a stop below 950, that 30 points below the 200-day moving average, and I'm pretty bullish on this stock.
Okay, pretty bullish. Sharad, do you share that view on Tata Chemicals? Would you also agree that this is a good one to hold, especially considering that, our viewer is looking at a longer term kind of horizon?
Yeah, I think 1.5 to 2 years. I am also thinking that one should continue to hold on. Valuations are not as such expensive, even if you expect the earning to stabilize around 80-85 rupees. It should easily target somewhere around 1200 to 1250 on the stock. And the positioning is very clear. The products are being used in the new industries at a very rapid rate. So whether it is lithium ion or the glass industry, solar glass, everywhere the usage will go up. And the type of projections we see for electric and as well as solar, I think both these segments could drive demand to a different level. So continue to hold for a target of around 1250, 1300.
Okay, got that. That is on Tata Chemicals. The next query comes in from P. Ravindran, who writes in from Chennai. He holds 500 shares of Ujjivan Small Finance Bank. He bought this at 28, so sitting on a good profit over here. The stock is currently over 50 rupees. He's now asking whether he should book his profits in this one or should he stay invested. Sharad, he's making good money on this. Consider a medium to long-term view from here. Do you think there's more to be made?
Yeah, I think there is a possibility that you might make some more money. The book value right now is 22, 23, and they have been growing at a very healthy rate. The reverse merger, and they're thinking of getting into mainstream banking, applying for that. Though there's not been much happening in that space since last probably Bandhan Bank got that license. But I think these guys can scale it up, and growth rates could be very handsome. The capital adequacy ratios are adequate, so I don't think they will need additional capital. In between, the GNPAs, NPAs had flared up, but right now they're at a very controllable level. The net NPAs are probably somewhere around 0.06%. Good collection efficiencies. I think the growth has also been very good. The customer additions have been strong. Around 10 lakh customers were added last year also. And I think that trajectory should continue. So considering they continue to grow at that rate, most probably the book value accretion over the next 1.5 years should be around 15-20 rupees. So around 30-35 rupees and a 2.5 times price to go. So you could be looking at 70-75 on the stock. So I think continue to hold. It's a decent 25-30% higher from current levels, I believe.
Okay, all right, 25 to 30% higher on from current levels for Ujjivan Small Finance Bank on the fundamentals. Quickly, Rajat, would you concur?
Well, this is moving up like the CNX Midcap 100 index. I mean, it has not even tested the 20-day moving average for a long time, and it is getting supported all the way up by the 9-day exponential moving average. So mid caps and small caps are doing very well, and this is one of those stocks. So carry on. I mean, put a stop loss below, say, the 20-day moving average, which is currently around 48. So I would say put a stop loss below 45 and carry on. I mean, very unlikely that it would fall and breach the 20-day EMA.
Okay, all right. Well, it's given returns of over 80% in just 6 months. So huge moves coming in from Ujjivan Small Finance Bank, and like Rajat said, it is a part of the broader markets which have seen such strong moves, up around 0.7% currently for the mid cap index as well. We'll take a short break. More queries lined up on the other side. Stay tuned. Welcome back. Well, let's get in a couple of more queries. We have K. Kashyap, who writes to us from Hyderabad. He holds 75 shares of Hindustan Zinc, which is bought at around 305, 50 shares of RITES, which is bought at around 475. Medium-term investor wants to know what the future prospects of these investments are. So RITES as well as Hindustan Zinc. Sharad, what would your recommendation be on both these counters?
Hindustan Zinc, I think they have some capex ongoing, which should complete over the next 1.5 years. But in terms of earnings, we don't think a lot is going to happen to earnings. They would remain steady. So it's already trading at somewhere around 14-15 times. And most probably with the way the cash outflow has happened out of the company because of the promoter entity, there is very little room that the dividend yield would be maintained at current levels. So even in terms of dividend yield, it will not look attractive, and it's already trading at 14-15 times. We do not see much happening to the earnings over the next 1.5-2 years. So I think that is something he can exit. RITES is an interesting story. I think the way they are placing it up through playing it up in the renewable space on the railway side of it, as well as more favoring the consultancy side of it, there is a possibility that they would continue to grow at a rapid scale over the next 2-3 years at least, because the railway expansion mode is very aggressive. So I think that is one story you can continue to hold. Valuations as such, RITES, it should not be very comfortable, but I think it's not expensive also, considering we are expecting FY25 the earnings to be somewhere around 30 rupees. So I think it should easily get around 20 times. So hold on to RITES for a target of somewhere around 600. Hindustan Zinc you can consider exiting.
Okay, got that. Rajat, I want your call on both of these as well. How are these looking on the charts? That's Hindustan Zinc as well as RITES. This is someone who's a medium-term investor.
Well, first Hindustan Zinc, I would say that he should exit and wait for levels between 250 and 230, around those levels. If he buys, at least there would be some profits that can accrue to him. Currently, it is, I concur with Sharad that one should exit. Regarding RITES, I would say that I'm also looking at a target of 610 to about 615. The problem with both these stocks, especially if you look at not the stocks but the purchase prices, that is 475 for RITES and almost pretty high, 305 for this thing, Hindustan Zinc. With these prices, very difficult to make money in the short term, so one should hold for medium term. RITES, exit Hindustan Zinc.
Okay, well, hold RITES as well as and exit Hindustan Zinc. That's the word coming in technically on both those counters. Sharad as well as Rajat, that's all the time that we have on the show this afternoon. Thanks very much for joining in and taking us through all of those questions. And do remember, viewers, that you can email us all of your queries and we will always address them with our experts. Stay tuned. Closing bell up next.